Hi, this is David with Emini tradingstrategies.com. We're getting ready to go long on a normal system entry. You see over to the right hand side we had a long EET trade. That was valid, and let's jump in right now here at about 28.50 is my worst case fill, and we're going to get a better fill there because it's below that. You'll see that the EET went long, and if we had the EET we'd have already had 4 ticks profit, and we could even stay in the EET longer and take the profit off the NSE. But we didn't take that trade. I'm demonstrating a normal system entry that's over on the left hand side here, and just looking for a 4-tick target. Sometimes an NSE is a higher probability NSE than a standard NSE, like when we're coming out of no zone, or if our long-term filter changes direction, something like that. This is not the case right now, so I would only take 4 ticks off this trade. Okay, if I were in recovery, I'd have probably taken that EET with the white little dot around the bar there and ran the 4 ticks, 5 ticks, got the NSE, and still stayed in the trade and try to get more. That's one of the advantages of an EET trade, is it's got better risk reward, but the disadvantage is that it's more aggressive because it's counter trend. But if the trend changes direction like it did here, we jumped in the NSE, the EET's already got 4+ ticks profit. Okay, so depending on your aggressiveness, you would take an EET or just wait for an NSE. Now, if we were coming out of like no zone, or the NSE was a higher probability NSE, if I had the opportunity to take the EET long, I'd have jumped on that and then tried to make the profit off the NSE. So in other words, the EET gets you in the NSE early. That's why it's called an EET, early entry technique. Now, we just formed a short EET as seen by that white dot. Now, of course, we would not take that trade because we're already long an NSE. Okay. Now, Pro Indicator version 2, that's the software I have on my charts. That simply shows all the trades. It doesn't know what trade you're in, so it doesn't, it just shows the trade. So just because it shows another short EET, you would place your trade based off of my rules, and my rules are that if we're in a trade, we don't reverse on a different trade. So even though there's a short EET right now, okay, we would still stay in it. Okay, so now that red hash mark, that's a stop loss. So basically, in essence, if this NSE is a winner, the EET short's going to be a loser. But you could still be in a long EET as well, trying to take your profit off the NSE, and you would still avoid the EET. So basically what I'm saying is once you're in a trade, everything else is irrelevant, and you would avoid it. You just would disregard it rather. The only thing we would do on an NSE is we do have reversal signals that if the trade does a couple things, we will reverse and go in the opposite direction. Okay, and that could happen on this trade. Okay, so right now the risk reward isn't all that good. We're risking 8 to only make 4, but we have so many. This is such a high probability winner of a trade, and we're not even coming out of no zone. If we were coming out of no zone, it would be an even higher probability trade, and I'd actually try to get more profit off the trade. So you can see the advantages of taking. Here we go. We're at profit, and then just move my stop loss here to entry. So let's just see if we can jump off. So you see the advantages of taking an EET early. You'd have made about 2+ points on that trade if we went long on the EET and stayed in for the NSE. Okay, we're off. Pretty good trade. Good video. We'll see you guys on the next video.